Thank you. What's good, y'all? All right, let's get into it. Welcome, everyone. What's up, Jay? See you in a few hours. Carlos, Joe, Corey. Is this the NFL draft? What? Yeah, definitely a moment of silence, man. So many missed entries. Yeah, there's some good ones, some bangers for sure. With that being said, especially like I'm extra cautious of my decision making after missing a couple entries. I like to make sure that we don't start rationalizing trades, entries just because it's like I just missed out on a couple trades. Could have been nice, could make a massive difference. Every trade counts, but it's okay. So ask yourself before you make any trades today, like, is this to make up for anything else? Or is this just a banger setup? All right, what's up, Gabriel? Zoe, hello. What up, Nate? Toby, Seth, RC, Buenos Dias, Alfredo, Patrick. The Sure Trade. I think that's new. Anyone, if you're new here, drop some ones in the chat. What's up, Carolina? Salud. Thank you guys. Rafa. Greg, hope you're enjoying the coffee. I will be joining you soon once this bad boy here is not absolutely scorching. And shout out to Nance for the coffee. Gold ended up coming down in my zone overnight. Yeah, it did. It played into that exact place. Did it trigger you? Let me know. What's up, Jimmy? Fernando? Why, Becky? What's up, y'all? Now, for those of you that are on the newer side to trading, obviously, like this is more advanced. Like, and we're just live trading. I am explaining some concepts, but it's all we're going right in there. However, with that being said, if you're someone that's been around the markets for a long time, but you feel like you're kind of not making any progress, like you're just, like you still feel like you're in the beginner stage, or if you're someone who's just pretty new to trading and you would like to advance a lot faster, then definitely make sure you check out this webinar that we're doing next Wednesday at 8 p.m. Central. We are going to be kind of walking you through what our fast track program looks like in May. So go ahead and check that out. I'm dropping a link to it right there. You can register just for the call, the webinar that we're going to do. So check that out. Definitely, if you're new to futures, if you are just new to trading, or if you feel like you've just been in the same place on the beginner side of things, then that's for you. If you have a built-out trading system, if you're already doing challenges and things like that, then that is not for you. So just to be clear. But anyways, with that being said, let's look at some charts. So, okay, we have an interesting situation here. So I'm gonna go to the 1 hour, and we're gonna look at both of these setups. Now, I'm going to start with one chart because, hold on, let me turn this around. I need to move this over. That's not what I wanted to do. 1 second. Okay, here we go. All right. Okay, so NASDAQ, 1 hour time frame, still bullish. Yesterday, we don't work our way down to these lower levels, despite Dow Jones and S&P getting down and reacting off of this area. So I very much still like these buys down here, whether that's happening today or tomorrow. I mean, technically, I guess it doesn't have to happen even this week. But I do still think it's likely that we work our way down to these zones. And we are definitely building up a lot of liquidity over here. So we got a lot of money just building up over here. This here is a big sign that, oh, we're gonna have money come into this bad boy here soon. So I don't think buys are very safe today. No, sir. So we got some money here. Retail buyers, I think, will get liquidated at some point. So if there's buyers that are going to build up here, I don't necessarily think that NQ is the sell. I think that we're probably better off selling Dow Jones, and it more than likely keeps making lower lows. As you guys will probably notice, yesterday during Asian session, we saw Dow clear these lows, trade down to this little tiny imbalance off of the weekly open. And so we trade all the way down to here before the market starts to recover. And this drop here kind of is what triggered a lot of trades. S&P came into the zone right here. Metals mitigated a big sell-off, and I'll dive into metals too here in a second. But that's what this big dump here happened, kind of out of nowhere. So I don't have any NASDAQ sells, but I do see some opportunities with Dow selling. And honestly, it's not just this zone way up here. It's actually another zone too. So I'm going to walk you guys through what I see here. What fundamentals do you believe are sending NAS to all-time highs? Just some of this AI hype? No, I mean, yes, you can definitely have all of the AI infrastructure. It's not even hype. I don't think you can call it hype anymore. Like, this shit is crazy. the things that these companies can do are absolutely mind-blowing on an enterprise level, and they're in the way that they're tied into the government and into technology for what's going on between the U.S., Iran. So, I mean, I wouldn't say it's hype, but is it overpriced? Probably not even. But I think the reason that markets are blasting through now is because, one, and we talked about this before, we liquidated it the way we needed to. So I think I talked about this. I guess the syndicate sessions got this more than anything else. But we rebalanced and traded back into these June levels. So the markets just became efficient and then rallied. And that's what they do. Like, the markets are not... the markets are... The fundamentals are just a catalyst. It's an excuse. So right now, when we liquidated everything, worked our way down, and then now big money is able to come in, like, they're going to send this thing up. So it's not like it needs a specific reason. Like, it really doesn't. Like, this is not like, I think the belief that there needs to be something truly driving the markets isn't true. There just needs to be an excuse. And I think a big thing that you can definitely tie into it is, okay, there's so much AI infrastructure, there's so much replacement. These companies are just taking over every single little detail. So yeah, I think that's the big reason why NASDAQ itself is pushing a lot more than Dow. You can give that the excuse for sure. Metals rallying the way they're doing so as well. The more time that we spend in this moment of uncertainty, this season, a year maybe of uncertainty, the more we're going to see assets go up. So things like for example, when wars start, there is more uncertainty, volatility. There's that emotion, that feeling of fear. So it's very easy to incentivize retail to liquidate positions, to exit the markets, to push price down, to create that fear. Once we kind of settle into wars, and this is my experience and just how I view things, this is, I'm like on year 11 here trading. Once you've been kind of used to it, you're like, oh yeah, the US and Iran, Ukraine and Russia, US and Venezuela, Israel and Palestine. Like once we kind of get into a rhythm of warfare and the fear starts to settle, then markets typically go and rip. So it's kind of what we see happening. S&P, PMI news, and 15. Cool. So anyways, with all that being said, I do see opportunities for shorts with Dow. And there is the higher zone that I like up here. So my main focus is, yes, the liquidation of NQ. But I feel like we might end up having a better shorting opportunity with Dow. And I want to bring up these zones where I think we can kind of play out of. So here's the 5 minute, and honestly I'm just going to go to one chart. I don't need two. So Dow over here, this is end of New York session. We trade up a little bit. We just pop over this previous high by just a notch, and then we dump to end the day, and then we continue to trade down here during Asian session and London session. We just broke above this Tokyo high, but there's a little bit more of an imbalance, and I think we couldn't reject this area here a little bit more. So I can see the market trading up one more time and then dropping. However, I also see this moment here where Dow absolutely rips and then dumps as the other zone. This, I think, has a higher probability of playing out up here. Especially because, so going from left to right, we clear these highs and we start trading below this previous structure on, let's say, the 5 minute. We work our way back, we feel some of this imbalance, and then we work our way down again. So if we're talking about the actual bearish structure that we're in here, this is the range that we're sitting in. The market makes a low here, fills this imbalance, comes down, it breaks below here briefly, zero demand, comes right back in. You get the, you can call it a shakeout setup if you want, right here on Dow, same thing with NQ, and then the market goes up again. So because this structure here, this failed to make any demand, we didn't trade down here. I wouldn't say that this is a structure this isn't structure, this is just a breach of the low. So I don't expect these highs to have to hold up. So I think the rejection of this zone here is low probability, and playing out of this zone up here is a way higher probability. Dow doesn't really show demand under Tuesday 21st at 1535, maybe 2035. Okay. Yeah, I mean, sure, it doesn't trade down here, but we've traded below here quite a bit. I don't need it to. Yeah, okay, cool. So, yeah, anyways, with structure here, it's obviously trading really different. So what I would want to see is, I kind of want to see where the market's at once we create highs again on NQ. So where does Dow take us by the time that NQ is making all-time highs again? where would that lead the market to? So I'm not rushing to sell this off of right now. You know, we had New York open about 90 seconds ago. So I don't need to sell this. If anything, like, we've built up so much liquidity for NQ, and honestly, NQ is holding up pretty well. So, okay. So yeah, these are, I was talking about the lower zone. Cool. So yeah, that's why I think this area here is not as strong, and plus we're seeing Dow push higher right away. So I'm not really looking to sell here. If it drops out of there, cool. Like, it's a trade that I didn't take, but it wasn't one that I say is an A+ setup for me. It's pretty average. Plus the fact that these lows are not holding up really well doesn't give this structure. Yes, we come back in and we kind of trade down here a bit. So you could argue that the market, you know, does have a lot of buyers and sellers, honestly, for hours at this level, but that doesn't give me the conviction that it would hold the stop right here, right? That it would actually still keep selling and trading here. Because sometimes you have an entry zone that looks decent, but is there enough motive for the market to fully reverse there? So the bias you could have right, but it doesn't mean that it's gonna hold your level. And trading is not just about having the right direction, right? You have to have enough precision, so your stop has to manage. And then, you know, it gets dangerous and you're just an amateur if you don't really have clear-cut decision on what your risk looks like. If you take an entry with a certain amount of contracts or lots, and then you just don't really have a set in stone stop loss, then you're just losing whatever you feel like it. And is that duplicatable? Not really. So metals or indices wise, obviously, you know, we liked the buys yesterday. S&P mitigated this beautifully off this order block. This is basically the trade I wanted with NQ, but we didn't get anywhere near this. And this is the exact buy that we wanted with metals. And so gold did two things, right? Gold played out of both zones. So gold first played out of this last point of supply and then didn't quite trade up to this zone. Just got to the 2R. This didn't trigger me. And because I did not want to originally take it as it was getting to this zone. So why not? When gold got to this area, and because we had this already marked up from yesterday's session, so you can go look at yesterday's session, you'll see we already had this marked up. And so when market gets to here, the issue was originally that gold gets to this level and silver is a little bit less bearish. So silver looked like a better trade, and I wanted to trade silver out of these lows. Like, I wanted a little bit of a lower entry, so I wanted silver buys. And then I made up my mind that I was going to buy gold because for the following reasons. So this is going back to this big spike down. So here's why I was ready to pull the trigger on gold, but it just happened too quickly. Number one, YM, this broke New York's low. So we see YM liquidate the low. So I was like, okay, that's, you know, that's the reason the market would stop dropping. That was one reason. So YM liquidates this low. Cool. Then at the exact same time, S&P trades into this big smart money sell-off and trades into the order block. So I'm like, okay, this is also efficient and could reverse. And NQ traded into this last sell-off from New York Open, like right after New York Open, and is rebalanced. It's not trading anywhere near this level, so this is playing out of structure and this order block. So then every single indice basically had a reason to reverse, a very logical reason to reverse. So I'm like, oh shit, this is gonna play out of this zone. It doesn't need to go lower. But by the time that I put all these pieces together, sadly the market was a little bit higher, and then my stop was just bigger than what I wanted to. So then I wouldn't have pulled the trigger. I didn't pull the trigger. So cool, didn't pull the trigger there. And then our second entry was the lower entry that I wanted was based out of this order block right here. And that's exactly what happened here a couple hours ago, where the market trades down into this finally, and apparently this is where there was a good pocket of money, because as soon as it came into this zone, this thing finally really ripped. So yeah, market's playing out of these areas really well and doing its thing. So now, with that being said, can this continue to go bullish or not? What do you guys think? Are metals gonna keep rallying, or is this not enough? Now, gold has been trading above the previous 5-minute high for the last 90 minutes. And that's some pretty good price action to me to show us that we are still pretty bullish and we can go higher. So I'm going to make this less obnoxious. So we're just gonna turn this down to like 15%. So I want that on my chart still. I want to look back at this a little later. And anyway, so that's that. Cool. Now the setup, I think we can trade out of here, no problem. I just want to see though, if this does end up, if we end up working our way down to here, I want to make sure that NQ has liquidated, because something that can dump the entire market is that liquidity capture for NASDAQ. So NQ obliterating all these buyers, I think, is very likely at some point. Doesn't have to be now, but I want to make sure there's market-wise motive for metals to go up too. So I like this gold trade as long as we kind of have some sort of liquidity capture with indices at the same time. Then I definitely like this gold idea. So I am leaning more towards this one. I'm gonna give this a little extra color since it's one that still hasn't triggered yet. So just so you know to pay a little bit more attention to this one here. So this is what I'm looking for. This looks pretty good. And then I can switch over to silver here. Silver broke the highs and then just didn't maintain the highs as much. So you can see silver it's got a much more natural, like, bearish energy to it. Like, it gets over to here and then it trades above here for like a pretty short window, an hour, less, and then it drops. So up and right back down. It's already sitting below the previous highs, whereas gold is still sitting above the previous highs and holding structure down. So buying gold makes a lot more sense. Selling silver, if there's a setup, makes more sense. Which, if you're looking at silver for shorts, I think we get a pretty good move to the upside to here. Let me look at just silver and not just not the micro or the whatever you want to call it. We see silver take out a lot of liquidity. So if you guys are probably looking at this was the move. This is the big move from yesterday's, and you have all of this right there. So liquidity capture, and then you have the market definitely establish demand at a lower low. So I think there's enough motive for silver to sell off. The question is, where do you take a position on silver to where it makes sense? And obviously, guys, when you're trading silver, it's big boy contracts here. Every little move comes at a pretty price. So here is where I would like to start seeing sells with silver in order to get a good risk, like a healthy risk. I'm looking to take a trade, honestly, way up here. So let's zoom out a little bit and let's decide whether this makes sense or not. So let's zoom out some more because, you know, we don't have to take any sells. Okay, so 4-hour structure. We have higher highs, higher lows in the 4-hour, higher highs. So right now, 4-hour, this is the zone that we're in. 4-hour did excellent reversals, rebalanced this imbalance over here. So it clears the lows and moving. Yeah, metals and indices are moving very similar. Silver and NYM moving very similar. So this last push down, so looking at the 4-hour, the motive behind this last crash, was it to establish lower lows, or right, is the intention really, okay, we're bearish on small time frames, is that more important, or is 4-hour imbalance fill and then the market trades right back up, is that a bigger reason? So what has more weight on the market, guys? The imbalance fill in the 4-hour or a 5-minute lower low? Let me know in the chat. What is actually more important to the market? The 4-hour, exactly. Thank you, Foz. Yoslin, 4-hour, yeah. So this is the higher time frame priority. Now the market rips. Okay, so here you can take a note if you want, do whatever you want, but you have, all right, this is a 4-hour rebalance. Okay, so all right, now when you work your way down, you can start to look at this from a different lens, and you go, okay, hold on. If now the higher time frame, the 4-hour is fully rebalanced, and when it came down here, it wasn't like it traded down here and then just, you know, maintained the levels and the prices. Nah, this came down and immediately just ripped again. So this is showing us, this might be more bullish than bearish, and things might be turning around. So now that this is happening this way, if you ever want to know, like, you know, when do I know if the small time frame is kind of done doing its thing? Well, when the higher time frame has become efficient, that's a pretty good moment. So continuing the sells here, I think after further review, it's not the highest of probability. This kind of trade, like taking a sell here, this is the kind of sell that looks good on the small time frames, but might fail because there's a higher motive. Plus, on top of that, we also have some liquidity build up over here. So you kind of have a couple extra layers that are giving more incentive for price to go up than for price to go down. So now, if silver has done this, and silver was more bearish, if we look at gold, and gold we saw rebalance April's price action and now starting to shift more bullish, all signs point that this is leaning more bullish higher time frame, and that the lower time frame bearishness has kind of wrapped up. So now when we look at this move that we're seeing here with silver, this sell looks a bit more vulnerable, to me at least. This looks like there is a chance that maybe the market rejects, but then it wants to play through it. So, okay, how far down can this go? So could it still play out? Sure, maybe. But is it worth it to me, knowing that the big picture is kind of showing me that this is going to want to keep going higher? I'm okay with it. Like, I'm okay with this one. I feel like this structure could be the one that doesn't hold. So I'm fine with missing out on this one. If it were to play out, and I like to future pace, so like when it comes to how you respond to the market, to trades that do or don't play out, I think one of the easiest ways to being at peace with, let's say, missing a trade, if you want to call it that, is playing it out ahead of time. So going, okay, well, if this were to profit, so let's say this were to go here, here. Let's say if it were to do that, not even this. Let's say we were just to do this. The market would trade up and then, you know, do its thing down. Would I be okay with not making any money on this trade? Because I definitely see vulnerabilities with it. Yeah, I'm totally okay with that. This has two big things. Higher time frame looks like it wants to reverse and keep pushing higher, and there's liquidity here. So there's kind of two big reasons why I wouldn't want to take the trade, and that's more than enough for me to miss out on it. And now at that point, I've already made a decision. I've already come to terms. I understand the expectations. So now you're not emotionally volatile afterwards. Because the issue is, if the market were to play out and it drops from here, if you haven't come to terms with your decision, that's when you'll make worse decisions later. Because the trade won't play out, or it played out without you, and then you feel like you're entitled to something. Oh, I should have made this, I should have done that, whatever. Whereas I 100%, I'm cool with this. So that's my take on silver. I think that metals overall look like they're ready to go higher. So I would love a pullback into this area and to take some positions for buys. If we get that, honestly, this is swing potential, in my opinion. This is definitely swing trading potential. This is going on the live swing. Let this bad boy rip for, I don't know, the rest of the week, maybe a couple weeks. So I'm definitely looking to swing this one. Happy Thursday. Where am I from? I'm from Chicago. My parents are from El Salvador. I don't know, maybe 5 generations beyond them are probably from Spain. And then if you go back enough, I'm in maybe Anunnakis or what's up? Pangea. And then beyond that, shit, man, I think we're all made out of stars. And then beyond that, you know, God did his thing. Yeah, now you know my entire life story. All right, what are these indices doing? S&P pushing. Dow kind of chilling, just chilling. So, okay, we finally, after about 20 minutes, we're seeing indices settle into how price action is probably going to move. So NQ took out the high, this little previous high from like almost 2 hours ago. So NQ already took it out and is leading the move to the upside. S&P following closely after, and then Dow is slightly lagging behind. So Dow sells again make the most sense. And then yeah, now it comes down to, is this going to be enough? Like, is this zone enough for this to continue? I'm not going to get in the way of any of this like internal range. I don't really feel like it. Even if it plays, same thing with gold. Like, it's same thing with that silver idea. Even if it were to play out, like, whatever. Like, I'd be more like salty if I get stopped because I knew that it's got vulnerabilities. And I don't even like it enough for a half risk. So, and does anyone have a TradingView discount they'd be willing to share? I think, I don't know if I have a thingy. Let's see. Refer a friend. I got you. Honestly, someone else can send it. I think I don't really need this, to be fair. So if anybody else wants to send theirs, you can just send yours. Whoever gets there first Run it up. I don't know if you get a free month or something. I'm not sure how that works, but but yeah, with that being said, I mean, it's pretty cool. This is just chilling. Okay, for review, oil. We talked about oil being at a good place for reversals over here. So oil, sweep, clean, cracks above, you know, the open, love that. And this is the shakeout. There was just a lot of London session action, man. What's up with that? So we see the market moving sideways, pokes up one last time, and then pushes here. Oil really kind of just barely nudges below and then comes back up, not making the most movement. So typically we're kind of seeing a loose inverse correlation between oil and then metals and indices. So I think big picture, I think oil just wants to keep pushing higher, but when indices pump, oil dumps, but just not that aggressively. So I think that when we end up getting back down to this level with oil is when we're going to see another pretty good dump with indices, but we're not quite there yet. NQ shorts, nah, I'm not looking to short NQ right now. My short for the day is leaning, there's a lot of liquidity here, so I do think we're going to see a dump on NASDAQ. I just feel like the dump might be more, like we're struggling to move higher with Dow. So Dow is where I would want to short, and then just take it to where that liquidity is, where NQ has it. But yeah, oil for me still is the buys are here. This is like what makes the most sense. I don't have a trade for oil right now except for this buy. So I'm looking for a position right here. So right in this zone, I'm looking to take a trade right there for oil. And based on how this is moving, it's going to depend on how we work our way down and where my exit's going to be. This right here has been a very strong level, so maybe a 2.5R. I think safely 2.5 looks good on oil. So I'll work on this. Depending on how market trades, if there's more liquidity over here, then maybe we go higher. But for now, I'm cool with this one. Yeah, let me pull up those CAD buys. I know Patrick talked about that too, so let me get to that here real quick. So today's setups, honestly, and for the week too, I'd say, but we have oil. And then I'll post gold and everything here in a second. Give me a bit. Yeah, let me look at CAD since I know it's a bit more time sensitive. Natural gas dumping, geez. So Australian is squeezing. The pound is squeezing too. It did just wick below a lot of stuff. CAD is dumping a bit more. So this is the one thing I don't like about this CAD trade, is that everything else is kind of pumping while this is dumping. So this is pushing further down. We got a break above these highs, and we traded above here for quite some time. And then now we're working our way down to this level. So here, all right, down to here. We play out of there. Market rejects a bit here. So here's the sell-off. $22 ticks, give or take. The market plays into here about 19, just a little short, pretty damn close. This is roughly where I'd want to buy though, down here. So you kind of have this range, this is the higher range, and then you have this level over here that looks good. This looks clean as well. Looks okay. This plays into some support over here, and then you have the at the very low end. This was the biggest move, the biggest sell-off, like right over here. So this is right all the way down. So there's a couple levels. Typically, I don't like when we see this. The yen, I don't know if this was Japan fighting back or something, but like the yen was just not looking to cooperate with me while I was out in Japan. So I don't know if they were just like, you come into my country trying to make money off of my currency. I don't fucking think so, man. Yeah, they're like, spend it, you know? So anyways, my point is with CAD, with this zone that we're in right now, right, this is more of a, 1 hour, sure, 15-minute structure. It just looks a bit more bearish. So CAD between all of the majors here. Actually, hold on. I think there's just more bullish price action with other currencies, and I think we're kind of just ranging quite a bit, so I wouldn't be surprised if we get a big sweep. So it looks a bit vulnerable. So not my favorite. Yeah, I feel like we could just go lower, to be honest. You have the market start to sell off from here. It bumps up a little bit, and then you get one more push down. So you could have your zone from here, or maybe you can consider a sell-off from here. Here's where we do start to liquidate orders, though, so I think that's fair. Entries around 73.21.5 makes sense. Where do you know when to start drawing up your mitigation zone? Basically, where market comes in, you could check volume too. Let's see. So like, for example, you don't have a lot of volume here. The volume really starts to kick in a little bit more right there. So look at how here you start to see it kick in, and then market money comes in to go higher. So that can always help you if you're like, oh, where does this really start? I haven't really leaned on volume too much, but you can. It might make it easier. Something worth backtesting for sure. So anyways, as you can see, price is just a little bit more bearish with CAD. Like, it's just dropping faster versus other currencies. So I don't really care to trade CAD. I don't really trade majors too often. I like trading majors on the extremes, and it's just like really noticeable. Like, it's just no question. It's higher probability trades. I don't need I look at a lot of assets, so I don't need to take lower time frame currency trades. because I don't need the volume, like I don't need the trading volume from majors. You know, these are like, cool, take the 1 hour zones, 4 hour zones. You take maybe one currency trade every week or so, you're chilling. Yeah, so it's like coming from the right, you gotta understand where you're coming from. Did you turn on the AC right now? Feels good. All right. Look at that. Current indices dumping now. Just took out these highs. Took out Wednesday's Tokyo highs. Filled the gap here. And then said, all right, we out. So we're done. I might bring Osmo over here. What's up, gang? Portable. So let's see. No, I'm gonna keep you right here actually. Let's see here. So we took the highs, dropped to here, starting to make the move. Okay. This is now bringing metals down. So look, we got a kind of like a little distribution on metals here. A little 1 minute distro action. Played out of this last pump up here. For those of you on the 1 minute, some of you might have sold something there. Not my kind of trade, but cool. Okay, so originally, right, what do we have? We like the gold buys. I still like gold buys. Structure played out of here, so we maintained highs for 2 hours. More than enough for a structure to be valid, in my opinion. We're seeing silver work its way down to these lows. Curious to see if we keep crashing down here or not. I have a feeling we're just going to come back up again. I don't think gold's going to make its move yet. I feel like it's going to work its way higher one more time. Looks like the dump that we just saw was not really doing much. A very short-lived move. So I wonder if this is just to entice and incentivize sellers, because it's still not a reason to get in the market for me. So chilling. Yeah, nothing there. Are you full risk in gold? Yeah. Oh, you got the oil shakeout? Nice. We were just talking about that. Yeah, I like a full risk on gold. For sure. I don't think it's going to happen right now. Okay, so yeah, taking a look at, so moving on from currencies, there are shorts. I think there's selling opportunities on currencies. Like the euro has this massive sell-off right here. So euro worked its way up to here. This would be a nice sell. Pound has a similar move, but the euro's been more bearish, so I think the pound is more likely. The euro is probably a better trade. So markup euro. Hey, Kayas, you're all set up there? Let's go. All right, so Larry, you took that gold sell, huh? Fire, bro. Peso has a similar setup. Yeah. So yeah, this is where like it really comes down to preference, and for me it's like I'll throw a fib on here and I just want to understand what's retracing faster or slower, and the way I'm seeing these dollar pairs move, euro is barely making any sort of retracement, so we're cool. So I wait on euro, but mark it up yourselves. Bitcoin almost hit that 80K level. We had this 79 price point here marked up. It looks like we just kind of cleared a little bit of liquidity here. Not a full imbalance. Like, it didn't really go deeper into the imbalance yet. So let's see. Can we see Bitcoin continue to rally from here? So big sell-off right here. Tuesday, New York session. Dumps right here. So sub 76K Bitcoin buys could be a thing. Okay. Oh, what I haven't done yet, and which I've been looking forward to, is I don't know what stocks are going to look like right now. We'll see. Probably pretty chill. Okay, I would choose the one bearish day with Webull, but Webull's rally has been epic. I took an options play right here. So this is actually sick. Like, this is right now the biggest options win I have. I haven't cashed out on it yet. It expires on the 1st, so maybe I take it honestly now, and then, because obviously this could rebalance, so the timing on options is why it's weird. Yeah, it's cool. Like, I forgot, options are a little bit more complex, but this one's running like a 5R right now, so it's cool. I think because I'm like just practicing. Options is the one thing that is just taking me the longest to just start to do in the trading game. But it was cool, like 5R on this so far, and this isn't even expired yet. It was pretty sweet. So yeah, we will run in, making its move. From the first buy I have, that play is down like 40%. But I've dollar cost averaged into this thing. So I'm averaged in pretty well actually now. Still in drawdown, obviously, but not by too much, because these buys helped over here. Let's see what's been on a decent run. Snapchat, I took a position here, I think at 5 exactly. AMC with rallying, Spotify doing something, Intel up a good amount, like almost 3.5x on Intel. Let's see, we've had our PayPal buys start to make some moves, about 20% from this last entry down here. So a little over 20% on that one. Just perfectly rebalanced. And then this one also put dividends going into it. So we've had a good rally, honestly. A lot of things made a pretty good move. What else did a nice move? Starbucks with a big pump from 85. So end of March, Reddit literally was like the 31st, April 1st. I was like, guys, like, if you're gonna want to make a move, like, now's your chance. Now's your chance to make some move. Holy Google rally. Boeing, beautiful. I have to find the session where we talked about Boeing entries, but Boeing is such an awesome stock if you want to just catch 4-hour swings. Like, this thing just is volatile. So volatile. That's one to keep an eye on for sure, just in the future. There's a lot of liquidity here with Pfizer. I would love to short this, put some puts on this thing. So once we get a little bit higher, I am gonna look to do an options play, a put on this, and then see if we can get this thing down below 25. Meta, wow, what a rally. So yeah, if you look at the biggest companies, the biggest stocks, if you want to get an idea on like, all right, when is the market going to stop really dumping? Go look at the biggest stocks in the world. And once those are seeing like daily level imbalances or liquidity captures or brief breaks of daily structure, that's typically when, all right, like it's over, you know? Wow, Lulu, crazy dump today. Okay. Lululemon names ex-Nike executive as CEO starting September 6th. All right. Tesla rallied. Yes. I talked about buying Tesla live. Actually, we got it on the perfect day. Yeah, Lulu is currently getting sued. Nice. Tesla's up. This play is up. It was up 20%. Now it's up like 10. All right, what else we got? Coinbase broke through 200 again. Very nice. Duolingo back over 100. DoorDash, nice, is up. All right. MSTR, I know some of you picked this up. Big move. 40% pump. Sexy. MSTR and Coinbase typically move pretty similar. One is just more volatile than the other. Huh? Lonzo, you're an MSTR? Sick. One of those two. But yeah, I mean markets are moving good. Things that I'm interested in. The one that I think still is a very high risk but high reward play. I'm curious about Lucid. I've been just picking up a little bit here and there, and like Uber just bought 11.5% stake in Lucid. And they want to turn it into like an automated taxi service, basically. They got like 35,000 vehicles. So that's just curious to me. Lucid is backed by oil money, like, so this thing is just dying. But I wouldn't be surprised if we get like an epic rally at some point. So this isn't like a big investment. This is like a Hail Mary kind of play, small amounts, but like getting back up into the 20s, like I just wouldn't be surprised into even 30s later. Yeah, so right now, I mean, everyone's down bad on this for sure, like anybody anywhere. But yeah, it's pretty cool. I think that it's kind of one of those like Hail Mary potentials. But one of the things too, when you're building a portfolio, like you do have to be very intentional with like, you can't, I don't invest the same with every company. Like conviction definitely plays it. So like something like this where like you guys are just losing money, but they're backed by infinite money, they can afford to just go, they don't care about what their stock price looks like. So yeah, but anyways, let's go back to some of the charts and then we can wrap up from here. So more liquidity buildup on NQ. YM in this zone that we had talked about before. I talked about how I'm not going to be shorting here. I'm going to wait for higher time for higher zones. We saw metals kind of rally back up again. Cool. Gold is still a trade that I like over here. So let's place that right there. Add it to the list. So gold's still on the radar. And Q way down here. So you guys have links and the image right there. And then Dow sells at the higher zone. I want to see NQ take out the highs though too. And then yeah, we got YM right here. Cool. So there you have it, guys. That's what we got going on for today's session. Got basically 4 different charts loading up here. 4 different setups. Actually, some the euro, but it just needs a lot more. It needs to go down way more, or up way more. But yeah, I mean, with that being said, have your alerts set. I don't necessarily think you need to just stay on the charts too much for now. Just kind of be ready. Have your alerts. Stay in tune. And the big thing, guys, really right now, obviously for those of you that are on here following along just perfectly fine, taking your trades, doing challenges, maybe you're funded, maybe you're getting close to payouts or you're failing to do so. As always, guys, we invite you to check out the syndicate program that we do, where it's a 1-year transformational program for traders. But if you are newer to trading and you want hands-on, like 1 month where you can basically in 1 month get a year to 2 years down worth of trading, then we are going to do a webinar breaking that down. So if you guys are interested in that, obviously feel free to check out the link to that. Next Wednesday we're going to be doing that, so check that out. We're going to be breaking down what that consists of and what that means to you. So there's a link to that. But I'll be in the school today. If anything is getting close, if we're getting triggered, I'll walk you through kind of what I'm doing. You can feel free to do the same thing or do whatever you feel like. That's also cool too. I am going to be giving away a 50K account here soon. So guys, I'm excited to give that away to you all. I'll walk you guys through what that's going to look like. And there will also be a 50K account that is given to someone that does do this fast track program with us here in May. So anyways, with that being said, y'all, enjoy the rest of your day. Go get active, go touch some grass, get some sun, and stay disciplined, gang. Peace.